How to invest your first $1,000 in New Zealand. Now, whenever you see a video like this, firstly, what you must understand is that people who want to talk about this stuff have to be very careful talking about it because there are rules about telling people what to do with their money. That's why everything like this is very generalized, and you're looking for the silver bullet or the company to put it in or exactly what to do or the exact platform, but people can't really do that. So you have to go and figure out what some people are trying to say, but also people will leave comments and tell you what they've done. That's part of how I've learnt by watching what other people are doing, but it doesn't necessarily mean that they are accurate, so you have to be careful with this stuff. Now, firstly, I want to start by giving you some information that I think you'll find is interesting, and that's the wealthiest 20% of households in New Zealand held the largest share of their wealth in financial assets, such as pension funds, shares, and investment funds. The remainder of households held the largest share of their wealth in non-financial assets, such as real estate and durable goods. So the top 20% of wealthy households in New Zealand hold a lot more financial assets. I was very lucky that I grew up in a household that didn't have a lot of financial assets. However, I got an education, which is a form of investment. And in that education, i.e. going to school, I heard them talking about the stock market and financial assets. I was only 15, 16, 17-ish at the time, and I bought my first share in 2005, so I bought my first financial asset. I was always captivated by money, probably because we didn't grow up with a heap of it, but I studied business, accounting, and went on that path. So I've been exposed to financial assets for 2 decades now, and what I've come to learn is it's actually very simple, and there's a couple of things that gets in the way from people investing in financial assets, and one is that they're so scared to lose the money so they won't take any risk, so that could be why you haven't started investing, and then secondly is that you believe that it won't make a difference. So even coming up with $1,000 might be a stumbling block, so you will go, well, I don't have 1,000, therefore I'm not going to invest. Or you will think that even if you do have $1,000 and you invest it, it's not going to make a difference. What I've come to learn from my own investing journey and watching many other people and seeing very highly successful clients in the business space who then take those profits and invest into business themselves in different shares is it's the journey and it's the habits that you create and it's the education that you learn. Now, what shits me is that in New Zealand, the bottom 40% of households tie up a lot less of their wealth in financial assets. So that's the household type that I grew up in, property, and that is very common in New Zealand. But what I learned from studying wealthier people and looking at data, just like recent data from Statistics New Zealand says, is that the wealthiest households have more of their money tied up in financial assets than they do property. So what I was trying to figure out, if I want to model them, what am I going to need to do? Well, I'm going to have to learn about financial assets. The beautiful thing about where we live today in New Zealand is that so many people have gone before you and they've created platforms to allow you to be able to invest. So you can Google how to invest in New Zealand and you'll find that there are hundreds of thousands of other Kiwi people doing this, but they are doing it, the ones that do it properly are doing it and doing it consistently, and it becomes a habit, and they're investing because investing will hopefully and most likely allow you to beat the rate of inflation and hopefully currency debasement. That's why people are trying to do it, because they know that things are becoming more expensive, so they're trying to protect what they have earned and they're trying to increase their income and create passive income streams or options for the future by having money stored that has beaten inflation to allow them to maintain the standard of living that they want to have. So that's sort of why people do it. But what I want you to think about, especially if you haven't invested, and especially if you have and you haven't taught other people around you to think about this, is that we are letting the wealthy households do more of this stuff, and they're showing us what they do. We now have access, we can be doing it, yet we're not doing it. So if that is you, I recorded a 4-part series. If you search the Keep the Change podcast over on Spotify, etc., and search invest, you will find like 4 podcasts that I created on why you haven't started investing yet. And it goes a lot deeper, and it probably takes about 2 hours. But I know that the simple answer that you want to know is, well, what do I do? But you're going to get stuck at like, what share platform? And then once you get it, which one do I invest into? Honestly, the answer that everyone's going to give you in the comments, and that people are probably allowed to say without getting into too much trouble, is pick one of the Kiwi share platforms, put some money onto it, and invest in a global fund or a exchange traded fund if you search for those once you get in there, and start your learning journey. And that's as simple as it is. But we humans, we create all this reason why not to. I can't afford it, it's not going to make a difference, I don't have enough money yet, I don't know what platform, I don't know the fees, I don't know if it's safe. Then we get stuck and we stay in this bottom 40% of households. And then we look at the wealthy and think, how are they getting so much further ahead? So sometimes we've got to drop all of that and go, people are already doing this. What do they know that I don't? And how can I model their behavior? Now, some of the other things that I want to touch on, and I put some notes together on my lappy as I thought this might create a good piece of content, but allow us to think a bit broader around this as well, is if you're not to start with, you need to be thinking about what your income is, less your expenses. That gives you your gap. And you want to start allocating money to investments first. So if you don't do some form of budgeting or cash flow planning or mapping of what income and money you have coming into your household, invest into that. Actually understand that to start with. Then set up an automatic payment to one of these share platforms into an exchange traded fund to get you in the habit of actually doing it. And if you do $20 over the course of a month every week, you're going to have $1,000 plus by the end of it, as long as the market continues to go up, of course. But you have to understand that all investment has risk and it is volatile. It's just like your life. You will lose people, you will get injured, you may change jobs. That is risk and volatility that you learn to manage. Investing is no different. It's very similar, and you can get through it in your individual life, so there's no reason why you can't accept some volatility in your current life. So if you don't, then use the likes of the Keep the Change Planner to map your assets minus your liabilities and things like that, and track what your gap is between your income less your expenses, and how you're going to allocate that, and track your goals monthly as well to keep your money on your mind. The second piece is maybe you want to invest into skills. Nobody wants to know this is the answer, but realistically your income is a form of an asset as well, and if you invest into improving that, then you're going to have more to then invest into financial assets anyway. So don't discount yourself from learning more and becoming more valuable to then increase your income, because then you can take a further gap and you can invest that into financial assets just like the wealthy households do. The third piece here is you might have debt already, so then you're going to get confused. Do I pay down my debt? Do I invest? Only you can really decide that, but if you've got high interest debt, you're probably going to want to clear that, and that's a form of investment because you're then having to pay less interest to the banks. Roughly, I think 59% of credit card balance, the total balances borrowed from credit cards is outstanding and is incurring interest. So for a lot of people, if you've taken on debt, that's another reason why you won't be investing, and you'll stay in that bottom 40% of households because you've fallen into the debt trap, just like I did, and just like the system is designed to get you to do. Instant gratification, excuse me, and then in the repayment cycle, and then I can't invest for my future cycle. So you've got to tidy that up as well, and I've done multiple pieces of content about my journey doing that too. But don't forget about clearing down debt, or maybe that's a form of investment for you. Maybe clearing your mortgage faster. Maybe you're already investing and you don't know. You're investing into you're paying off your mortgage faster, and that's guaranteed returns because you're then paying less interest to the banks. Some people will talk about investing into experiences, and that's valid as well, but this is where all this stuff gets confusing. Invest into education, experiences, then you get stuck there. You've got to understand what your form of investing was. It's $1,000. It might not change your life, but it might, because it could create you to become someone that's got so much momentum with their investing that you're a completely different person. You're building new habits. You understand compounding, you learn about something different, you understand what that could lead to if you got involved with that, you start rolling a bit more confidently, and you're better with your money, you use less debt, you're a completely different person. So $1,000 could in fact change your life when you start investing. And lastly, the other one I missed there is like travel. People will talk about travel being an investment. Okay, yeah, cool, get that, and yes, at times it can be, but don't recklessly go and travel and spend all of your money on that and then go, oh, how am I not in the top 20% of household wealth? Because you don't have financial assets. You've invested into travel, you've spent it all. Like the marketing machine has told you to do that. And same thing with flash clothing, excuse me, and things like that. People buy these things because they're told that they're an investment, but are they a financial asset? Only you can decide that. They're probably not. They're probably marketing sold at a higher margin, like a handbag, etc. Would you rather have a $5,000 handbag and $100 cash, or would you rather have a $100 handbag with $5,000 cash sitting in it? You get to decide which of those you are. Finally, think about what's holding you back. Think about why you haven't invested. A lot of us, we don't have the education. That was similar for my household settings where I grew up. We were in that 40% where you're not doing that stuff because you don't have exposure to it. We can't use that as an excuse anymore because there's education everywhere. There's share platforms everywhere. There's KiwiSaver providers everywhere. You could even get an employer contribution that's going to match your contribution, which is 100% guaranteed return. You're investing those into financial assets. You're acting like the wealthy. You're moving your family and your household up through the percentages. You're modeling what they're doing. It's all accessible to us now. So you have to think about it. Can't be the lack of education. It has to be the lack of application or or action. Well, they're the same things. Applying the education, but taking the action. So think about what's getting in your way and what you can do to get out of your way and start taking action. Love to know your thoughts below.